I think this year is the perfect year to start learning how to trade properly. And there's a very, very specific reason for this, but I'll tell you at the end because I first want to go over all the things that you need to do and will save you a ton of time and money if you want to start trading this year, or if you've been trading, or if you've been watching my videos or any other like type of trader on YouTube, and you're like, oh, I'm trading but I'm not good, and I need to like take everything to the next level. In this video I just gonna show you like what is the blueprint in my opinion, and what will kind of give you the best time, value, money, everything that is important. And I want to start directly with the very first point, and that one is find an edge. What is an edge? An edge is something that's a setup, or kind of a trading strategy that works for you. So it could be not even related to trading. This last few years there have been people making millions and millions of dollars from airdrop farming, and they do it like professionally with 10 wallets and all the crazy shit. So this could also be an edge. This could be a market, or it could be a sector, even if you're not that great. Like, for example, Ornos was a few years ago, or maybe it's a AI agent or something else. Find a niche or something that is really not saturated and you have high belief, and do a lot of work and research. But when it comes to trading, that is something like a setup. So it might be a breakout, or it might be a failed breakout pattern, it might be a continuation pattern, all kinds of patterns. And that's actually the easiest part in trading, to be honest, because even if you Google it, or if you watch my channel or any other trader on YouTube, if you watch it for long enough, they will tell you how they trade and what are their setups, and what to look for. And I really believe that it's not that much about the actual strategy that you're going to use, but it's all about the execution, and obviously how you manage your mental side of the game and all those things. And which brings me actually to the second point, and that is 50,000 trades. There are many people that will tell you use a fake account with fake money, put in the hours, put in the work. And I personally agree with the second part. There are no shortcuts. There are people that place one or two trades and they make it big and they think they're great traders, only for a matter of time though, because after a few days, or it could take months, years, they lose all their money and they don't know why, because they get cocky and so on. So my very simple rule is, if you're new, or a little bit more than beginner, just place as many trades you can with your edge, or while you're looking for your edge, because this could take time to find or to fine tune. And then do those trades consistently, like in and out every day. If you have to like become even a day trader, if you have the time, obviously, because this relates to the next point. And just lock the trades. Lock the time behind the computer, and do it with real money. It could be $5 or $10. It doesn't matter. It doesn't matter how much money you have, because you can use leverage and so on. So just the very important thing is to just put in the hours, put in the work, understand the charts, because there's so many variables and you get so frustrated sometimes. But even here, like this is the Bitcoin chart, like you, with time and with trades in place, you will learn how this chart trades, how the asset class trades. It could be equities, it could be whatever, gold, silver, whatever you like trading. It might be just one stock, Tesla, or it doesn't really matter. But logging all those trades and getting in the computer, charting stuff, finding the edge, taking a trade, getting stopped out or making some money, analyzing it, going back, this is the way to become a good trader. There's no other way. There's no shortcut. None of the traders I know took less than 2 or 3 years to get good at it, with a lot of trades and with a lot of ups and downs. So very, very important. Don't skip this step. Next one is get a job. Simple. Very simple. If you don't have a job, or if your job is not paying you enough to afford some money on the side to trade, get a freaking job. Because you will have a hell of a easier time if you get a job, and if you have a job that's stable and lets you trade on the side. There's this a big misconception that trading is great. I want to be a trader. I want to be a full-time trader. And I wish you this. I hope you get there. And I don't think it's a terrible thing to aim at. But we know the stats. We know the percentage of people that get there. Don't take this against you or personal, but you're likely going to fail. And if you have a job, this will relieve the stress, first of all, of finding the money for rent if this month is not yours and not trading. Trading is not going well for you, because you'll be having stretches like this for sure, guaranteed. But having a job really puts you at ease and gives you some security while you are putting the hours and logging and all those things. And trading can also, because it depends what style you're going to develop, but trading doesn't need to be your full-time job. It could be a side hustle. It could be something that you're passionate about and make money on the side, which is, like people flip apartments or renovate apartments. There are all kinds of side hustles. This could be one of those. And getting a good job will help you benefit in the long term. The next extremely important thing is record everything. And I mean every single thing. All the trades here that you have, record them. You have a diary, a journal. I'm personally using Edgewonk as a trading journal, but I've been doing it in Excel as well. You can do whatever you like. You can use whatever you want. Just have several simple things like what's your entry, what is your setup, what is the instrument, what's your exit, what's your P&L, did you win, did you lose, and analyze why this trade happened. So are you happy with it? What was your mistake? And then you'll see the patterns. You'll see what are the mistakes you make very often, because you're going to do those. You'll be able to find ways to control your emotions better when you see the patterns. And it just opens. It took me a lot of time to start doing this properly. And it's been so much better when I started doing it. I've seen like my P&L clearly, because sometimes I would take a side trade that's not logged in my account, and this also is a bad habit that I got rid of. And you'll see so many things, and you'll see so many patterns when you have good data. And that's one of the reasons you need to take like so many trades in the beginning, to have the data to be able to analyze yourself and make the most out of the knowledge and the experience. Because you could get coaches, you could go and pay for courses, but at some point you have to do the work, and you have to do a lot of work and self-analysis, and recording everything in a journal will help you do this. The next one, this is very difficult to grasp, but I think it's one of the rules that you gotta really start with from the beginning, and that is play the percentages. Play the percentage game. What do I mean by this? It doesn't really matter what you start with. As I said, you could start with $10, you could start with 10,000, 1 million, whatever your bankroll affords. But if you want to develop proper habits and skills, you need to play the percentage. So let's say your portfolio is $1,000. Let's put it this way. Very, beginner friendly. If you're placing a trade, try to risk, as a general rule, no more than 1% of your portfolio. So that would be $10. So let's say you got a trade here, let's say on Bitcoin, whatever, you're taking this breakout, your stop is here somewhere below this low, and then you're aiming for this high. So this stop here should not be no more than $10. This is the amount you should be risking on a $1,000 portfolio. And this will tell you how much potentially money you need to invest in order to be risking $10 to lose on a 13% drawdown. And then don't look at the number, because you will get, let's say you get to your profit target and you'll be like 50% up. 50% up on whatever is this, like $90 position or something like this. 50% is like $45. So for some of you, this might be a lot of money, but for some, it will be nothing. And you'll be like, but that's nothing. Let's run it up because the number is too low, blah, blah, blah. That's a huge mistake that people do, especially in the beginning, because you look at the numbers And it is the same with if the number is too big. Like, oh, I made this very easily, so I can double this or triple this and quadruple whatever, and you get carried away with the number, the actual number. So I would strongly suggest whatever you do, just play the percentages. It doesn't matter how big it is, your portfolio. Obviously, you can adjust the risk. You could be 0.5% or less than that. Really depends on your risk tolerance. But just play the percentage of the overall trading bucket. And this means that you're going to have just one side bucket that's going to be for trading, which you can base your percentages on, not like 5 different buckets from which you trade and you do this. No, just one entire place where your portfolio is this much. It's the money for trading, and you risk, let's say, 1%, and you look at the percentages. So if you risk 1% and you make 2%, that's amazing. It doesn't matter what's the value, because if you have this year, let's say you have a total of 10% win on your overall portfolio. This means you have now $1,100. That's amazing. That's 10% on an entire portfolio for a year. That's huge. Obviously, if you're in crypto, we're spoiled and we want to have more gains than this. But in the long term, if you can keep this consistency, that's a lot of money. Compounding is amazing. So definitely play the long game. I've fallen victim to this, not taking profit or not cutting something because it's just a $50 loss or $100 loss, or $1,000 or $2,000, whatever your number is, and I just leave it until it gets to a significant number that I'm like, fuck, how do I get this to go so low? And this usually answers my question. So the next one, I think this is massive as well. Accept being wrong. Very difficult in my opinion. A lot of people, depends how you've been raised, it comes to like self-analysis and so on, but if you're not ready to be wrong in trading, this is not the thing for you, because you'll be wrong most of the time. Like 60-70% of the time you'll be wrong on your thesis, because what we do, like, the market is random. You just place calculated bets. Let's say you went long here because this here broke out, whatever, you're targeting new highs, perfect setup, 18% risk, we just broke out before the sell-off, and then it flips back and sells off. You're wrong. And then you could be wrong in so many times. Even if your directional position is okay, you could get stopped out early, and then the market continues in the direction you chose. But you'll be wrong a lot. And if you cannot accept this mentally, and if you are struggling with it and you always want to be right, trading is not for you, guys. Simple as that. I'm a kind of a person that I want to be right a lot of the time, and trading has humbled me and has taught me a lot about myself, to be honest. I still struggle with the losses, but that's why I kind of try to develop a system where, I don't have to overthink, or, I know mechanically that if this happens, I do this, and don't try to get into the, but I want to be right, or I want to be wrong, or this and that. It's very crucial. It's very hard to understand, but you will understand it, with time and with a lot of trades that you're going to be posting, because at some point you get in a streak, you'll be right, and then this will hit you and you'll be wrong, and this could lead you to much bigger losers than what you would have in general, just because you want to be right again. You like the feeling, the rush, and you believe you are more than the market. Usually this is when you blow up your account, and this fact that you need to accept being wrong, this will humble you. And this next thing, and simple to be put in words, but very difficult to execute: discipline. This is probably the hardest part in trading, to build up the discipline, to follow the system that you have, your edge, and not get carried away. So when a token hits your stop loss, you close it. When you see an entry, even though you're scared, and you mapped out your trade in advance, and you see red candles, and you see I'm gonna buy here, but you don't because you're scared. This is where discipline kicks in, and this takes years to build, honestly, if you don't have it by definition. And that's why I'm saying it from the beginning. Like, just going through the list and keeping all those on your list, this is building up your discipline. Like, playing the percentage game, it's all about discipline. Recording everything, it's all about discipline. being able to get a job or have a job and be good at it, and on the side do something like hard as like trading, or do consistent trades like every day pretty much. These are all part of the discipline. But really, like, just sticking to your rules, and evaluating if your rules are actually good or not, because then you might have to adjust. It's all about discipline. And look into small things in your life that could cause you not to be disciplined, and that are not related to trading, and you'll discover an entire universe of things about yourself. I've done videos about this, about myself and my analysis, so definitely go check them out. But yeah, this is pretty much the checklist. The thing that I told you that this year is the best year to start is the thing that I want to end on. Let me tell you, every year is the best year to start. And why is that? You might be expecting for me to say something. Oh, but we're in a bull market. Now it's perfect. Now you're going to head start. Now you're going to make a lot of money. Wow, even while you're a beginner. And that's such bullshit, guys. And if you're watching the video until this point only to hear me say, wow, but why this year is the best year to start, it just shows you the first problem you have with trading. Having these expectations and hopes that somebody will, Mr. Market, will find this solution for you, that you'll get rich real quick and everything will be fine. No, it's gonna be hard. It's gonna suck. If you're getting to a bull market, maybe you get cocky and you forget to sell, and you don't really have the rules in place to protect you, and we start getting lower and lower, and you're delusional and you think you are still in a bull market, but we're already down 50% and your portfolio is down 70% from over trading. So all those things will happen to you. And if you really get into trading, keep this in mind. On the positive side, there's trades to be had every single day on every single market. Like, just my primary watch list, I would say, has like more than 20 tokens that I'm watching on crypto side, and there are thousands and thousands of instruments to trade there, even if not hundreds of thousands, that you could trade and find a trade that meets your criteria. And all this requires just the checklist that I mentioned here, time and effort, and every single day that you decide is the perfect day to start trading. There are no like major catalysts that will cause you to really make it or get a head start above everybody else. So yeah, guys, that's it. If you like this video, you know what to do.